Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bearish scenario where we're looking for a bigger impulse to the downside in blue, 1, 2 and then a 3, 4, 5. After this impulse to the downside, we then want to see a 3-wave corrective structure and another move to the downside. Inside this blue wave 3, we then have the white subdegree count. So inside wave 3, we can count another impulsive move, 1, 2, 3, 4, and then a wave 5. Now the reason why preferably we have a double 1, 2 here, meaning 1, 2, 1, 2, looking for a wave 3 and then another 4, 5, 4, 5, is because of the volume. You can see that the latest move to the downside here has the highest amount of volume of the local trend towards the downside. And it is rare for a wave 5 to have this sort of volume if we want to count this as a wave 1, 2, 3, 4, 5. In an impulsive structure, it is by far most common for a wave 3 to have the highest amount of volume, and now with this count over here, we count this highest volume move to the downside as a wave 3, as we are looking for a wave 1, 2, 1, 2, 3, highest volume, 4, 5, 4, 5. Now we have a very clear invalidation, which is the high over here at 64.1k. This scenario could even become more bearish if you create a third 1, 2. So therefore, you then get a 1, 2 here, 1, 2, and then another 1, 2 for then a big wave 3 to the downside, but we are not there yet. The invalidation stands 64.1k. In the bullish scenario, we're also still looking for price to move towards the downside to create a double zigzag. Now let me explain. What we're looking for here is an ABC zigzag inside wave W, then a 3-wave corrective structure in a wave X, and then another ABC to the downside in a wave Y, creating a WXY double zigzag. Now this is a corrective structure, and after a WXY zigzag, you expect price to move up to take out the high here at about 66.5k. The invalidation is also this high here at 64.1k, similar compared to the impulse to the downside, making life simple, but what you can see is a vertical line on the chart. I added a fib time on the chart, which is taken from the start to the end of W, and then you double click over here. And you can see that this wave X is shorter than the 0.382 fib time compared to W. So what that means is that wave X is shorter than 40% the size in time of wave W, which is incredibly short for a wave X, and therefore it does impact the probabilities negatively. If we then finally go to an alternative, still a bearish scenario, we have a finished or soon to be finished 5-wave structure. So 1, 2, 3, 4, and then a wave 5. Now the issue with the probabilities for this scenario is that now the highest amount of volume is in a wave 5. As you can see here, local trend to the downside, this is the volume in your wave 3, this is the volume in your wave 5. And as mentioned earlier, it is very uncommon to have the highest amount of volume in an impulse inside a wave of 5. If it does happen, it is more common to see that in a wave A, so a corrective move, compared to it being a wave 1, but that's just an extra detail. Now what you're looking for here is a bigger 3-wave corrective move to the upside, preferably taking out the high and invalidating the other two scenarios. However, the invalidation for this scenario is the high at 66.5k, and what you're going to be looking for is a 3-wave structure to the upside in a wave B or 2, and then still another leg towards the downside to take out the low wherever the low of this wave 5 and therefore A or 1 is going to be. If we then finally go to the 4-hour time frame, I like to show you this volume profile. This is a volume profile taken from the low to where price is now. And you can see that the value area high here acted as a support shortly before we then move to the downside back inside the volume profile. Now this is quite interesting because it increases the probabilities to at least look for the point of control and potentially even the value area low. So we gotta be aware of these levels because those might be support levels, and the value area high can now act as resistance. So the resistance is then 63.2k and a point of control at 59.5, value area low at 55.5k. And if we then look at the CVD divergences, then locally all of the CVD divergences played out, and currently here there are no bullish nor bearish CVD divergences on the 15-minute time frame. You really gotta wait for a bit of a range to form before looking at the CVD again, which in general is actually a tip from an Elliott wave point of view as well, that if price is moving on volume, one of the best tips is to wait for a range to form of a couple of hours, as a range gives the most amount of clarity. And also from a CVD perspective, we like to see a range. If we then look at the probabilities of the different scenarios, then on the 1 hour time frame, this move to the downside here, the probabilities at the moment are highest for a 112 impulsive move to the downside, mainly thanks to the volume in the latest move to the downside, typical for wave 3. On the number 2 spot, we then have a WXY double zigzag due to then wave A ending on a high amount of volume. So here, the highest amount of volume move would be counted as a wave A. And a wave A and a wave C in a zigzag do have a bit of a tendency to have a high amount of volume. So therefore, this takes the number 2 spot, and then on the number 3 spot, we have a finished A or 1 due to the highest volume in the latest move down again, because it is very uncommon for a wave 5 and then a 1, 2, 3, 4, 5 to have the highest amount of volume. However, and this is important, in general, based on the local structure to the downside over here, the probabilities are highest to still look for lower prices unrelated to a specific Elliott wave count. Because if you looked at the scenarios, this scenario, bearish scenario, 112, we look for downside. In this scenario here, we look for an ABC, we still look for lower. And even in this one here, if we finish with a 5 and look for B or 2, we're still looking for a wave C or a wave 3. So unrelated to any particular count, the probabilities are still highest to look for lower prices to come. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.